Two big finance results are about to hit us. HDFC Bank today, Bajaj Finance tomorrow. And in a few days, we should also be getting ICICI Bank's numbers. Meanwhile, State Bank stock has been sulking. And therefore, to discuss the big five in the banking space, all the Sensex Nifty stocks, I have with me Suresh Ganapathy, banking analyst at Macquarie Capital Securities, and by far one of the best observers of this space. Suresh, good morning, and thank you very much for joining us. Just help us pad up for the HDFC Bank numbers. I just saw your own analysis or forecasts of all the major players, and it looks like a very difficult quarter for HDFC Bank. Your year-on-year NII growth is all of 7.3% forecast. The pre-provisioning profit is actually flat. And even the net profit, you're only seeing 4.2% growth. Looks like one of the worst quarters compared to any other of the big banks.
Yeah, so just to clarify here, Lata, our numbers take care of the previous year September numbers also as a pro forma number, right? It's for like, includes HDFC Limited also, whereas obviously the company is unlikely to report the 2Q merged pro forma numbers, last year 2Q what I meant. So clearly the numbers on a reported basis for them would look like 25, 30, 40% because obviously it doesn't include HDFC Limited base of the previous year. But what we have shown is if we had to include HDFC Limited base, but this is how the numbers are going to look like. And it indeed looks like a subdued quarter on a like-for-like basis, mainly because of the fact that there is going to be a massive margin compression post the merger.
What will the margins be? Say, quarter on quarter, where you can compare.
Yes, sure. So if you look at it, HDFC Bank standalone margins were 4.3% on an interest-earning assets basis as of first quarter. That number will come down all the way to 3.7% or so, 60 basis points QQ decline post the merger. So it's a pretty sharp decline that we're talking about.
You think this is priced? Or, I mean, when the results come, what might light up the market and what number might sour the market's mood, you think?
So yeah, so any number much lower than the 3.7% margin will not be taken well by the market in our view. So we do believe, I mean, these things are pretty well flagged off. The company obviously hosted a analyst meet to discuss merge numbers before the results. So to that extent, people are fairly aware of the fact that this is going to be a subdued quarter when it comes to margins. One area which the market will be keenly looking at, Lata, is that they did had quite impressive 1.1 trillion rupees of deposits on a QOQ basis. So we would like to know what is the composition between retail and corporate here, because if it indeed is going to be, say, 80,000 crores of retail deposits added, and let's assume 30,000 crores is non-retail, it's a great outcome in our view. So any number deviating from this particular expectation could be either positively or negatively interpreted by the market.
Oh, yes, of course. Suresh, what about, will the bank give you anything in terms of being able to compare like to like? I mean, you've really given me, you put a cat among the pigeons. I wasn't prepared that they're going to give us, last year's unmerged number and this year's merged number. Then, we are all at a loss how to interpret the numbers. Will we have anything to compare?
No, Lata, you should look at it in this way, right? I mean, the point here is that post-merger, whether the bank can sustain the same level of ROA and the same level of, let's put it this way, growth, because at the end of the day, if they're not able to do that, the merger is not going to be value accretive, right? So to that extent, you just take the benchmark as the previous quarter, right? Previous quarter, they ended with a 2.1% kind of an ROA and a 4.3% kind of a margin, right? So you take that as the benchmark. Of course, the numbers are going to look much lower than that. And then the trajectory of going back to the original levels of margin and ROA is what the market will be keenly looking at. Forget about what happened a year before and what could be the merged pro forma numbers. You are going to evaluate HDFC Bank based on what was the number pre-merger and whether they can get back to the original level or not.
Okay. Actually, the stock has done nothing for the last couple of years and definitely not since the merger. It's just meandered between 1,300 and probably 1,500 rupees. So you think, therefore, all this 3.7 margins, all that is already priced in and there can be an inflection point after the numbers?
I mean, look, yeah, so good question. So obviously this quarter, we know the The chances of a big positive surprise is low. You already know that a lot of these pain points are going to be felt into the numbers. I think a lot is going to be significantly dependent upon Lata, how well they can get back to the original trajectory of margins and, of course, eventually ROA over the course of next 12 months. So maybe 12 months down the line, you are looking at a far better picture in terms of PPOP growth. So, for example, the like-for-like PPOP growth that I've talked about is flat this quarter, right? My guess is 12 months down the line, the number could easily be 25% up. So that's what I think is the trajectory that the market will be keenly watching for. And if at all this is really the worst quarter, then you would likely to see improvement in margins as well as ROA each passing quarter. And remember that this is the only bank which, at least starting off from a low base, this quarter can show improvement in margins and ROA for subsequent quarters, whereas you're going to see exactly the reverse trend across all other banks, right?
Oh,
Going forward.
yeah, that's indeed a silver lining, you as you point out. Okay, Bajaj
Yeah.
Finance. I mean, 30%, even like 2-3 quarters back, they were still in the high 20s. It looks
Yeah.
like they've now come back to the 30s. So you would expect an outstanding number. Just prepare us for it tomorrow.
Yeah, I think the stock obviously positively reacted for that strong growth number that they reported. I think the market will be keenly watching out again. I mean, this quarter, the most important metric, to be honest, to be looked across all the financial services entities is going to be margins, because you're actually going to see margin compression flowing through from this quarter onwards, and obviously also in subsequent quarters. So while Bajaj Finance growth numbers, of course, have been pretty strong, we'll be keenly looking out for what could be the margins and eventually the ROA for this quarter. And if they can indeed deliver a better outcome there, then it's obviously hats off to them. Yeah.
Okay. Okay, Suresh, then for the other three, ICICI, Axis, SBI, let me have a common question. Would you worry about
Yeah.
this? I mean, which of them are most likely to be impacted by margins?
Sorry, Axis, ICICI, and SBI. So my guess is
Yeah.
that
I'm only
Axis
referring to the
obviously
big
already
five
see
here.
saw a big jump in cost of funds in the first quarter itself. So to that extent, I think the relative margin decline could be limited. I think the problem what happens with banks like SBI is that your ROA is very low, right? So compared to, say, for example, ICICI at 2% plus. So when you have a sharp margin compression, your ROA also declines much faster because your dependence is pretty high compared to others, right? So are we more worried about SBI's margin compression this particular quarter, because they already had a sharp margin compression higher than expected in 1Q. And if the same trend continues in 2Q, clearly that would not be a very good outcome in our view. And also, we do believe some credit cost normalizations will start happening at least from next quarter onwards. So in that sense, clearly a bit more worried about an SBI's margin trajectory than Axis and ICICI at this point in time.
Okay, I want to get in that unsecured loan as well, but very quickly on
Yeah, sure.
margins, beyond this big five, where would you worry? Because I saw your excellent note on how people are offering 7.5, 7.8, 8%, even on savings, some of them 7.5. Who are
Yeah.
the vulnerable spots here?
No, it's clearly going to be the PSUs to some extent, the smaller banks to some extent, because what's happening here is HDFC Bank, because of its tremendous requirement for liabilities, is really pushing the envelope, right? They're adding so many branches, and there is so much pressure on deposits, and deposits are not easy to come by. So you can see how difficult the environment is when it comes to raising deposits. And more so, if you look at CASA deposit growth, that's been much weaker than the overall term deposit growth. Obviously, we're talking about a rising rate environment where very clearly, or high interest rate environment, very clearly the tendency to keep balances in CASA is low. So clearly, the smaller or the mid-sized private sector banks, and extrapolating that, what it actually means, Lata, is even for the NBFCs, the cost of funds is going to remain high. A guy like, hypothetically Bajaj Finance or Shriram Transport or everybody else needs to keep high rates on the retail deposits when banks are giving such high rates on term deposits, right? So it's a corresponding catalyst effect that plays across the entire financial services universe.
Okay. Yeah, and RBI is still in tightening mode. Okay, now to come to this unsecured loan worries that
Yeah.
Reserve Bank keeps raising. Actually, Mr. Swaminathan, in that credit policy speech, was quite clear that he is not going to take any action now, that they are just waiting and watching at this point in time. Here,
Yeah.
who are the vulnerable spots?
No, again, Lata, there, whatever checks and balances that we have done, speaking to some of the credit bureaus also, is that there is some pressure on the small ticket personal loans, that is a smaller ticket size. While there has been an increasing risk-taking ability for with certain financial services entities in the system by giving more loans. For example, if a guy is taking 5 loans, you're giving sixth loan, seventh loan. So those kind of behavior has been seen. But what also we have found out here is that again, speaking to the bureaus who have got greater access to the bank managements, is that the liability balances have also increased, right? So you are some extent self-funding your overall loan to the so therefore what I would believe is going to happen here is that the stress will first percolate on the fintechs, then it moves on to the lower quality NBFCs, then the higher quality NBFCs, then it moves to some of these smaller private sector banks, and then finally you're talking about the larger ones getting affected. So we are quite some time away to see that kind of let me put it this way, outcome with respect to impact on the larger banks as of now. We're yet to see actually the impact on of unsecured loans flowing into some of these smaller players. So I won't worry overly about the impact, at least on the larger banks. If I were to really worry, I would worry on the NBFCs as well as to some extent on the lower quality private sector banks.
Okay, then we'll worry about that on another day. Can you just once again revise for me today when the results come what we should look at in HDFC Bank? One, you said 3.7% margins. And the other
Yes.
thing that you said is that you're expecting a total deposit growth of what, 80,000 crore? And if that 50,000
No.
crore is retail, okay, please go ahead. What is the number we watch
Okay,
out?
so sure. So there are 3, 4 things which you all need to watch out for. First, 3.7% margin is on an interest earning assets basis. 3.5% margin is on an total assets basis. That's a number to look out for. The ROA needs to be at least 1.8%. Okay, it will be lower than the 2.1% ROA that they reported the previous quarter. The total deposits on a quarter-on-quarter that they raised was about 1.1 trillion. Out of the 1.1 trillion that they have raised, our expectation is at least 80,000 crores, 75 to 80,000 crores should be retail, and the balance 35,000 crores is corporate. So this is the number that you guys need to watch out for.
All right. Thanks a lot for that, because that's very precise things that we will look forward to and check out whether the company has come up to speed. Thank you very much, Suresh, for joining in and giving us an idea of how we prepare for some of the big BFSI numbers that are going to hit us this week. HDFC Bank today and Bajaj Finance tomorrow. It quite clearly, decide the course of the Bank Nifty and indeed the Nifty itself. On that note, wrap up on Bazaar. Shortbusters up next.